Hey, welcome Rain King members, and also hello to all of you that watch the Rain King public monthly video. Welcome to have you aboard. And if this is your first time watching a Rain King Insights video, we welcome you as well as we talk markets. All right, let's just remember that all of the videos by Rain King LLC are for educational purposes only, and I'm an individual growth stock investor not affiliated with IBD or Market Surge. All right, let's go over a lot to tackle. The indices, we're going to talk about market catalysts, a little bit of some research that we've done over the last few years about key signposts of leaders. Then we're going to talk about a sale, summer sale here at Rain King Insights and some offers, and then we'll wrap up for the weekend. Okay, let's dive into looking at the indices. Last week with members, we talked about looking at the NASDAQ composite coming out of a sharp correction. And we looked in the NASDAQ 2016 correction here. Then we looked at the NASDAQ, that 2018 meltdown in 2018 before we had the bull starting in early 2019. And here we are with our current market from the meltdown that we had related to tariffs. If you line them all up and mark the lows, all of those markets eventually came back to start a new bull market. And you can see here, the point of the chart was to say, once you approach overhead resistance on the left side, as you can see in the yellow, the market tends to pause a little bit. And sometimes it has a little bit of a couple little corrections. You can see here in 2016, we corrected, then we had another correction before we really launched to new highs. Similar coming out of the 2019, there were a couple small little corrections and a little deeper one before we really launched. So here we are in 2025. We're in June. We talked about the shelf that we were building just below highs, and we said maybe we're going to come back a little bit and then launch to highs. It appears that we're actually continuing to just move up now. We're right around new highs today. So the market is a little stronger. Doesn't mean that we won't pause here at the all-time highs a little bit and doodle around, but things look good. Now, if we look at the NASDAQ composite in isolation, we've been tracking some of the accumulation days and the distribution days. Last week, we just talked about this little launch pad that we had built. We had gotten over this little resistance area and it became support. And now it looks like we're launching through, and we were focusing on the 20,000 level in the NASDAQ to really give us a green light. So we've got some support off the 20 here. We're at all-time highs. We're above the 20,000 level. That's all very constructive. Now, a little bit of a teaching moment. I wanted to look at this bar we had last Friday. This candle was a 3-bar break. And for those of you that don't know what that is, I'll quickly review it and the lesson. Now I've taken this little box and I've blown it up bigger over here. Here is the Friday down candle. Now a 3-bar break is when the low, the close of this bar, takes out the previous 3 days low. So he took out this low, and this low. You're breaking those 3 lows. That's a 3-bar break. It's a negative downside break. It's usually concerning if things continue to deteriorate, particularly a market that maybe has been on a big run. Now, the rule of thumb that I use, and I've shared with all of you, is I usually, when we see a 3-bar break, I want to see a recovery of at least 50% of the 3-bar break within 2 to 3 days, and that can negate the 3-bar break. Well, you can see on Monday, we had a down open. We flushed down, touched the 21, this purple line, and we pushed higher, and we clearly took out more than 50% of the bars in one day, not even 2 or 3 days. And then we gapped up the next day. So very powerful reversal, really negating last Friday's poor action. So that's just a little teaching lesson. All right, let's look at the S&P 500. Again, we are at new highs. I'm a little pause. I'm recording this around 3:30 p.m. Eastern time. The good thing this week is on the gap up day, we had really good breadth, 2.8 advancing stocks over declining stocks, really good breadth. Then yesterday, we had another very positive breadth day on the NYSE. We had 4.4 advancers for every 1 decliner. So 2 very good days as we pushed out here to make a run at new highs. So that's very positive. And for those of you that watch the golden cross. That's the golden cross is about to occur, where the red line, the 50-day moving average, is going to cross above the gray line, which is the 200-day moving average, and is generally considered a bullish cross because you get the moving averages to really be stacked in order. The teal is the 10-day, the purple is the 20-day, and the red, the 50-day, will be the next one to stack above the 200-day moving average. Okay, a little bit of side research here from Carson Research. They put together a table looking at when the market is higher in May and it's also higher to close out June, what did the rest of the year look like? Okay, we can look at this table. The quick summary is July tends to be positive as well. Almost 70% of the Julys after this condition of a positive May and June are going to be positive in July. So that's a nice data point. But look more forward looking, you can see what does Q3 look like after these conditions, and what does the next 6 to 12 months look like? It's even better. 80% chance that Q3 will be positive, 94% chance that in 6 months we are higher. So this is all really speaks well that history is behind us here when May and June finish in the green. So just a good little factoid to have in the back of your mind. All right, let's get to some market catalysts and why I'm feeling really bullish about a lot of things coming together in this market. So this ignition to new highs. I've been talking about this for at least 3 to 4 weeks that I thought we really could light a fire here. It looks like the idea that the Fed is going to cut rates in July is probably going to happen. And interestingly enough, the market is already at all-time highs. I don't know the statistic, but usually the Fed is not cutting rates at all-time highs. It's just even more fuel to spark a bull market. So that's a very positive thing. Clearly, Powell is a lame duck. Trump's going to replace him, and he's probably going to replace him with a new person, and that person will probably be inclined to cut more rates since Trump is really pushing for more rate cuts. So again, that could be more tailwind as we get towards the end of the year. The administration has a number of things going on. They still have this big, beautiful bill they're trying to push through. They're talking about a tax cut bill later on after that. Who knows how the tariff resolution is going to play out. Now we're hearing July 9th might slide, and who knows, the overall effect may be less harsh than the way they've been talking. And the administration has clearly made it a priority to embrace crypto, and certainly crypto is a risk on in the market. So I think that's all very, very bullish. Now the bullish sectors, and we watch sectors and ETFs that really, really need to participate in a bull market. And we're going to look at a few charts in a moment, but the chip stocks are really, really starting to perform. SMH representing the semiconductors, and we'll look at the broker dealers and some others in a second. And behind all of this is the thematic generational wave of change. The AI build out is just continuing, and it's getting more aggressive and accelerating. And certainly applications on top are starting to show productivity gains and a lot of growth ahead of us. So this is really, really just a thematic push behind all of this with young companies. Now the fuel, I've mentioned this for 3 weeks with the membership, and I'll show you that chart again in a moment. Fund managers are underinvested. They didn't believe the rally, and they're actually behind. And I think that when we really, really push a little bit further into new highs, there is going to be incredible institutional FOMO of chasing the rally, because they're going to start underperforming if they don't start putting money to work. In addition, if we start getting rate cuts, there's $2 trillion in money market funds that you likely would start to see that money start moving from money markets back into equities when rates come down. So that's another big, big pot of fuel to push this market higher. This is the chart I was talking about the past couple of weeks. This is S&P futures positioning. The black line is the S&P index. The red is asset managers and hedge funds positioning in S&P futures. Generally speaking, you can see that the two lines are in sync. The positioning is mirroring what the index is doing. you can see that their positioning started to get very negative right before the top, and they were out early. But you can also see that at the bottom, look at the market rally. The market's up here near new highs, and the positioning has been very slow to recover. There's a big, big gap here. And this gap, according to macro charts, is $100 billion of gap where positioning should be. And again, this is what I'm talking about as fuel for institutional FOMO. If you're an asset manager and you're not fully invested and the market takes off behind you, you better start putting money to work or you're going to lose your job. So let's see what happens if we get some July fireworks. All right, I called it this chart. This chart, this little graphic, comes from my 2025 market outlook, which is available free on my website, rainkinginsights.com. This is the December 29th slide that I put together, and I said, this is my rough prediction of how the market might flow in 2025. Exactly the chart that I had. I had said, well, I thought we were going to start off soft and we were going to correct. I had said maybe somewhere between a 5 and 7% pullback by March. Obviously, it wasn't necessarily about new administration uncertainty, but it was the tariffs, and it was a much deeper decline into April. We corrected over 20%. But the idea was there was a correction in the spring. And then I had said that I thought we'd get a nice rally in the spring and summer that would actually take us up to new highs. And that's where I think we are now. We're right on schedule. I think we're going to be pushing into new highs for the summer. And then probably in the fall, I said we might get another 8 to 10% correction, maybe September, October-ish, and then probably grind our way higher to the balance of the year. And I had made an estimate that maybe the whole year finishes up plus or minus 12%. So I'm not great at predictions, but so far this diagram that I produced in December is generally what's happening. All right, I mentioned bullish sectors. The semiconductors are so important to the market. It's been a bull market. And so I've got two charts here. This is the long-term monthly chart from 2001 to 2025. And you can see in recent years, semiconductors have had some incredible moves, but they also have had some pretty devastating corrections. Here's a 47% correction in the 2022 bear market. Now, this little bump here doesn't look like much in the monthly chart, but this was, if we look at the daily chart on the right, this was the large head and shoulders top that the semiconductors formed from basically May of last year. And then throughout the fall, we finished a couple of shoulders and we broke down with a big head and shoulders top. And that was really a lot of weakness in the market. Now, here's the positive. Look at the strong action we've seen since the market bottom in April. Really, really strong action, and we're approaching new highs. We haven't seen this strong of action out of the chip stocks in over a year. So this is really bullish for the overall stock market. Another bullish sector is the broker dealers. That's XBD, and this is the ETF. Again, monthly chart on the left. You can see here that this little area here is basically a small consolidation right at really all-time highs that go all the way back to 1998. You can see on the daily chart, here's the tariff bear market, and then the big push. And then after that push, we've had a nice digestion, a nice sideways tight digestion with broker dealers, and now they're moving out to new highs. That's bullish for the market too, when the broker dealers are leading the market. And the last one I'll show is consumer discretionary, XLY, monthly chart on the left. You can see here that the big correction we had in 2022, then we came out of it and we've corrected again, right? Almost right back into the neighborhood of the previous base breakout. On the daily chart, you can see again, the setup is simply, we had a 26% correction with the tariffs. We came off the lows and we got this nice flag, little digestion, a bull flag. And you can see this looks perched like it wants to ignite and make a run to new highs. So consumer discretionary is another one of those sectors that is really bullish. If this were to break out to new highs, it would be close to all-time highs. So that's another feather in the market's cap. And also wanted to look at the Magnificent Seven. We look at this periodically. This is the big seven, the MAGS ETF. And you can see it's still below the old highs from back in December. So there's still a ways to go. Now, about 2 or 3 weeks ago, I shared with the membership what I call the Junior Mag 7. And this is kind of a custom index that I've put together, which blends 7 other stocks. And those 7 stocks that make up the junior mags are CrowdStrike, Spotify, Coinbase, ServiceNow, Uber, Palantir, and Netflix. And I got this idea from All Star Charts, who I believe identified these names as potentially the next, who knows, the next 3 to 5 years, these could be trillion-dollar stocks. So interestingly enough, the junior mags broke out 6 weeks ago. And look at the performance. We are at all-time highs, and this composite index is really running. So we're getting a lot of action in the next tier of leadership of the market, and it's not just the mega caps in the Magnificent Seven. All right, let's move on to a little bit of research here and talk about some key signposts. All right, before we dive in, this is the chart that I keep whenever we get a nice new rally coming out of an intermediate correction or a bear market. We always want to monitor where the leadership is. So this is plotting the NASDAQ on a bar chart, and I've plotted all of the breakouts, what day they occurred during this rally. And we know from Bill O'Neill's teachings that 25% of the super stocks, the big winners, will break out before the follow-through day, 35% breakout in weeks 1 through 4, and the balance tend to break out on weeks 5 through 13. We are 11 weeks into this rally, and you can see all of the names. Look at all the leadership, and you'll also know that these names in the light blue are new IPOs in the last 4 years. We love to look at new merchandise. They can be some of the biggest winners, and you can see some of the names that are already resonating. Look at Rubrik, that's in there. Look at CoreWeave. Look at some of the other names that are really starting to work. Roadblocks has been on a tear. So there's a lot going on. Hood, still a recent IPO in the last 4 years. So we want to always be in touch with the leadership. Now, myself and Mike Kincaid did a model book study on the market cycle from 2020 to 2021. And we studied 159 of the biggest winners of the COVID bull market. And we went into a lot of deep detail. And one of the things that came out of our study was something we call the key signpost for super stocks. We got into looking at some very specific metrics, including green flag status, moving averages, price action, the first 12% pullback, all kinds of different data. And we eventually developed 7 key signposts that you can identify in real time to see if what you're holding is an average stock or maybe it's going to be a super stock. So we also put another layer on it to look at for clues on which stocks might be easier to hold on a big move and which ones are harder to trade. So we put together this signpost template, and it's a template that goes from the breakout to the first 8 weeks. We believe in the first 8 weeks is when you get a very clear picture of who the next winners of the market are going to be, and it starts as early as the first couple of weeks. So just a quick overview. These are the signposts. The breakout area, green flag status. This is really Bill O'Neill's, a stock that goes up 20% or more in 3 weeks or less to get green flag status, though we have looked at this fling green flag stocks in detail, and they're not all the same. So there's differences. Moving averages, price action. The first pullback is really important to understand if it's normal or abnormal. How much additional gain do we get from the green flag to week 8? And then how do we make the decision at week 8 to either sell and move on or hold the stock for bigger gains? So that's really the template. Now, all of the data, the real key data of what to look for is in the study. Now, I just put the signposts, the ones that have emerged recently in this bull market. Here's Hood. Now, we don't have all the signposts because they're developing gradually, but you can see here, here's the breakout, an 8.2% price gain. The volume was tepid, but it broke out. It did reach green flag status, so that was important. And you can see some of the characteristics of the earnings and sales and earnings surprise right around the breakout. You can see some interesting action here under price action. I've circled it right around the green flag. What is that telling us? And then you can also see that so far from breakout to where we are today, which is actually today is day 35, we have not had a 12% minimum pullback in the stock. So what does that tell us? And what can we expect when that pullback does happen? So in the study and in the research, we know exactly what to expect, how many days the pullback should take, and we also know how deep it could go. So this stock is up 69%, and we're on day 34. Another current leader in the market is Rubrik. Again, there's the data block of the statistics on the earnings and sales. Here's the breakout, and this had an incredibly persistent advance. It reached green flag status on an intraday basis, which tells us more information about the stock. And you'll notice, though, right after earnings, we started to have our first pullback. So we had our first pullback. It was 18% in 10 days. You can see it here. It's come all the way back down, almost down to the pivot. The question you want to ask yourself is, well, is that 18% pullback in 10 days? Is that normal action and I should continue to hold the stock? Or is that really weak and maybe I should let it go? Well, these details of the study can help understand which decision you should be making. The stock is still up 20% and we're on day 34. So Rubrik is giving a little bit of a different picture than Hood. So this is the kind of analysis you can do with young leading stocks, in weeks 3, 4, 5, 6, as they're unfolding, if you have the data. Now, if you're interested, we are offering a free white paper at Rain King Insights. If you go to Rain King Insights and just go to the homepage, which is www.rainkinginsights.com, there'll be a pop-up, and we are offering for free the white paper that talks about what are these key signposts for super stocks. Grab that PDF if you're interested. The other thing is, if the PDF really piques your interest, we do offer the ability to buy the entire report, which is over 300 pages, and it comes with a 3-webinar series, which is 4.5 hours, where we break down all the detail of all the key insights and statistics. If you go to the website here, you'll also see a video. This is a quick 4-minute video to tell you what's in the report. So it's worth 4 minutes to check that out. All right, now moving on to the summer sale. I don't have a lot of sales at Rain King Insights, but this is one of them. So if you go to Rain King Insights, under the memberships tab, pick the summer sale tab. You'll come to this page. We are having sales right now on our annual memberships. We are also having sales for those of you who are interested in model books. We have done model books of the biggest winners from the 2012-15 market, the 2016 to 2018 market. I have a high tide flag model book and the 55 greatest winning stocks between 2003 to 2020. They are all available now with a $50 coupon off using the coupon code. And we've just introduced a brand new Express Series membership. If you don't want to tackle a complete 12-month annual membership, this is a way to get involved. You can get a 60-day membership, and it includes a 3-video package of some of the educational material in our series. And you'll also get my weekly updates of this general market update for the 60-day period. So that's 8 general market updates plus the 3 videos. And you can pick what level of video you're interested in. The Raindrop Express series is for people that have 0 to 2 years experience. The Sprinkles Express is for people with 3 to 8 years experience. And the Cloudburst series is people that are more experienced with 8 to 10 years of trading experience. Just click on the details and it will share with you the videos included in each Express membership. It's a great way to get a sample of the quality of the educational content that I provide and my teaching style. All right, let's try to wrap up the markets for this week. So where are we? Percent off the highs, we are at all-time highs. To me, the fuse has been lit. This market should make a move. The power trend has been on for a couple of weeks now, and it's still in place, meaning we are still in a strong uptrending market. New highs and new lows. The NASDAQ is picking up new highs at a stronger pace than we've seen during this entire rally. It's been slow to get going. It's now starting to pick up, and it might accelerate. The leading stocks are pushing up and they're pushing out to new highs. There's stocks leading the market. They're already at new highs, and they were at new highs well before the indexes. So you want to be in the leading stocks. Exposure levels, I've increased these by 15% this week. We've gone from 60 to 70%. Now we're at 75 to 85% exposure in the market. Depending on your level of risk, you may be at lower levels. I'll just share with everyone that I currently am at 100% exposure level right now. Now, members of Rain King Insights, we are positioned in the leading names. We have Hood, we have Palantir, we have Broadcom. And the most important thing is we have good average cost. We're positioned really strong. The stocks are moving. We can basically withstand a pullback and look for opportunities to add to our positions. Strategic adds will allow us to get heavier with our positions down the road. We just have to be patient and looking for additional entries. Now, we've worked very hard in the membership over this challenge. It's been a challenging market. We've worked hard to get good positioning, and I think we've got some great positioning here. So now we just need to let the positions work and not follow it up with our emotions and not follow it up by adding to the stock too quickly and raising average cost. There could be some real fireworks in July. I mentioned the catalyst. I do think there's the potential in institutional FOMO, but as always, we'll follow the market. There's no guarantees. So here's the quote of the week from Unknown. In trading, impossible things can happen regularly when the odds are priced at zero. It wasn't that long ago in the tariff meltdown that people really started to get down in the dumps and started selling stocks, and they froze up. When the market turned, we had a follow-through day, and they were literally left behind at the gate because they refused to buy on the follow-through day, and they didn't get positioned in the stocks that were revealing themselves as the next leaders. So when you think something's never going to happen and the market would be at new highs, only 11 weeks later, everybody gets positioned on the conservative side when those that take risk and follow their procedures, their routines, and their plan are positioned for the next bull market. So I'm hopeful that all the positioning we have at Rain King Insights leads to some really great returns this year. All right, that's the general market update for June 27th, 2025. Enjoy the weekend. Let's hope next week is a holiday week that's also going to be beneficial to us in our positions. But again, don't get in front of your skis. Take it day by day. Things look really good. But again, things can turn on a dime, so we want to be flexible, but I'm optimistic.